Okay, we are officially live. Welcome everybody. Now I need to double check here. I'm getting up as I check. Let folks filter in here.
Nice.
But yeah.
This was in New York.
What's that? Yeah,
was very
yeah, yeah.
yard.
Dan has a story behind this. I don't know. I don't remember what it is. To
Okay.
be honest, I don't listen most of the time. He tells me the story. I was like, that's cool. Like there's a halal card up there. A
Yeah.
horse with two heads
Oh,
for
two
some
heads.
reason.
Yeah, yeah.
Those are from his old company. Those pictures.
Oh, nice. The good old days.
Yeah, right. Exactly. Exactly. So, do you do? I feel like you probably get outreach from a lot of Italian entrepreneurs and founders.
Actually, yes, yes, and lately more and more. We had this one Italian YouTuber
Yeah.
that has a lot of followers, like especially for Italy, and very specialized in like in tech startups and so
Yeah.
on. And that interview went, really. It's a very long interview. It's like
Right.
half an hour, something like this,
Yeah.
and it got about 100,000 views. So
Wow.
with that, I feel like people that actually go through the whole interview, then
Yeah.
they get a pretty good sense of like
Of you and the
who they are and
business.
so on. And I got a lot of people that reached out on LinkedIn asking for advices, or people that wanted to look for work in like in New York.
Do you get a bump in like business or traffic, like the same similar to Shark Tank? Not as good as Shark Tank.
No.
Yeah.
But we definitely get a bunch of Italian tourists.
Really?
That come over.
That comes
say,
through. That's good.
see you.
Yeah. I like that. It's good.
Yeah.
It's good.
It's nice. It's good to have the location of Fifth Avenue because it's like
It's a big tourist hub
as a
now.
tourist,
Yeah.
you're definitely gonna walk that piece
Yeah.
of land because it's between the Flatiron and the Empire State Building.
That's right. That's right.
So usually people combine the two things.
Yeah.
And if we're lucky, they don't stop at Italy,
Yes.
to eat
Oh, yeah,
over
right,
there,
right,
so they
right,
come over to Avo.
Right, and they come, yeah. Because you're how many blocks down from
So it's like
2 blocks or 3 blocks
from
Italy?
we're like 4 blocks.
4 blocks.
Yeah.
Yeah. Well, cool.
Yeah.
Well, if you are just tuning in, thanks for joining us. I'm Abhinav Kapoor, co-founder, CEO of Bikky. Thank you for joining us for this experimental live webinar, live stream that we're doing for the first time here at Bikky headquarters. Joining me today is founder of AUVs, Alessandro Biggi.
Biggi.
I've known him for 6 years. I still can't get the last name right.
Fine.
But to be fair, he's never asked me my last name either. So
Abhinav.
That's it. Thanks for having us. Thanks for being here.
Of course. Thank you so much for inviting me over.
Of course. And just before if we're a little bit sluggish during this, we just had lunch from Avo in the office. And Avo, I'm sure you're excited to share your concept, but to get started here, we're going to be talking a little bit about something that's top of mind in the industry today, which is thinking about how to drive traffic. Right, as I'm sure Ale can attest to, inflation over the last couple of years has taken a toll on industry sales, on industry traffic. McDonald's announced earnings just this morning, talking about how the extension of their $5 meal combo is starting to bring back traffic. Of course, there are other
bigger issues now.
Yeah, bigger issues notwithstanding, which didn't happen until October. So we got a good snapshot at least through the end of September. But there's this persistent quest for value and this persistent quest to understand how to, in the mind of today's consumer, consistently re-engage them so that they feel like they are getting value when they eat out, or whether it's dine-in or whether it's off-premise, third-party delivery aside, which continues to feel like it's booming and kind of no end in sight in terms of its trajectory. But before we jump into all that, Ale, why don't you tell us a little bit about your background and Avo and how you came to found the concept?
Definitely. So yeah, Avo started back in 2016 on paper, or actually, on Instagram.
Yeah.
No, we like to say that we started Instagram because what we wanted to do was testing if there was interest for a concept around avocados back then. And so when I had this idea of creating a place for avocado lovers, in the sense that avocado is super healthy, but also it's a fatty fruit.
Yep.
So the idea was to combine these two elements and create a concept where you could get something very good for you, but also very filling and satisfying. And so we started back in 2016 with this Instagram account. The brand name at the time was Avocaderia.
Yep.
And it was like world first avocado bar coming soon to New York.
The world's first.
World first. We did research. There was nothing like that.
Yeah.
And so we said it's coming soon to New York. the soon was very indefinite because I was based in Seattle,
Right.
and my business owner Francesco was in Mexico.
Right.
So we're like, okay, we'll see if it's ever gonna happen.
Right.
But long story short, fast forward about a year, like we saw that the concept was resonating a lot. We were able to build an online community of about 10,000 people that were very engaged. Also, Instagram was a little different back then. It was easier in a way to create even more engagement in a viral way without investing too much.
Yeah.
And so in 2017, we opened our first location in Sunset Park in Brooklyn.
Yep.
And we decided to open in that specific location because some friends recommended us. We knew that the landlord was, were the same people from Chelsea market, so we knew that they were going to invest in developing that part, that area, and also because that's what we could afford. We came to New York and it's like,
what was the footprint like? What was the square footage?
500 square feet.
500.
Yeah,
with studio apartment in Manhattan. Not even.
Not even.
Yeah.
But we initially came here again, not knowing that much about the industry and not knowing that much about real estate in New York.
Right.
And some brokers started showing us $20,000 spaces a month, and so I was like, no, that's not gonna work.
Yeah.
So we took down the space, which was $1,500 dollars a month, and
which is rent that is probably unheard of in New York City right now, even in that area for that space.
No, absolutely. Yeah. So we said, okay, no, let's try.
Yeah.
It actually took us quite some convincing, with the landlord, but then we were able to sign for a 6-month pop-up.
Yeah.
And then it became we got extended because we had a big success after we opened it.
Yeah.
And so then we opened sort of another location in 2018. Then obviously with the pandemic and so on, things changed a little bit. But we used that time to evolve a little bit the concept. And then in 2021 we opened the third, in 2022 the fourth, and then last year we opened the fifth location.
Yeah. That's amazing, and still all New York City based, and now it's just expanding. So started in Brooklyn, and then second location was, I believe, Chelsea on the west side.
Yeah,
and then maybe walk us through third, fourth, fifth, kind of what the progression was like in terms of the neighborhoods, at least.
Yeah. So
because every neighborhood is so
absolutely
hyper local and very specific.
Yeah, absolutely. I think every neighborhood could be its own, small city somewhere now.
Yeah.
So second location was in West Chelsea, and the building was similar to the first place where we opened.
Small footprint,
small footprint, around 600 square feet, in the old industrial building.
It was the bottom of an office building, if I remember right.
Yeah. So, for us, the strategy at the beginning was to understand where there was a captive audience that would be interested in having our food for lunch.
Weekday lunch crowd.
Exactly. Yeah. So we found the space, and the rent was about $4,000 a month.
Yeah.
So a little more, but still very, very achievable. And we're able to open that store with our own, with the proceeds from the first store, because the first restaurant opened and we started making money right away because we already built that community beforehand.
Right.
And so people got excited, and we had a crazy line at the door, and we got a lot of press and so on. And so with the proceeds from the first store, and then we got a deal for a cookbook.
Yeah.
We opened the second store. Then in 2019, we raised a little bit of money, about $600,000. With the plan to open 2 new stores in 2020. Then obviously the pandemic came.
So I was going to say, when you were talking about the store expansion plan, you mentioned 2018, 2017, 2019. Then you just jumped to 2021. We kind of left 2020 aside. Yeah.
No, but I think I told you, like, for us the pandemic, obviously, like for everybody else, was a terrible time. Like we went to zero, like sort of immediately.
Right, overnight.
Which sucked because actually January and February 2020 started very strong.
Right.
So we're like, wow, this year is going to be good.
Yeah. Strong. What does strong mean when you say very strong?
I mean, we were growing probably like 15% year over year. Yeah, something like that. So it was very positive, especially for January and February, which usually are very slow months for us.
Right.
But it was year 2 for that store in Chelsea. So it makes sense. It was sort of ramping up. So, but we used the time during the pandemic. It was the first time we had time.
Right.
In a way. And so there was the moment in which we decided to rethink about certain aspects of the business. We realized that while the whole avocado bar idea was cool and innovative, and in 2017, the reality is that a lot of the dishes that we were making called for a one-time experience, or maybe like, once every 6 months experience. Right. And that was never our purpose. Our purpose, like, has always been to sort of create comfort through healthy food.
Yeah.
So this idea of mixing the healthy fats, with really good food, so to fuel for the day.
Right.
And so we decided to evolve a little bit the menu based on what we thought people were coming back for.
Yeah.
Which mostly was salads.
Right.
And bowls.
Right.
And back then we only had few.
Right.
And so when we, fast forward end of the pandemic, 2021, we're able to navigate it. The PPP, we invented a grocery delivery service for a few months.
Everybody's throwing stuff at the wall.
Every possible thing we tried.
Yeah.
We kept the team engaged, which was very important for us. And so in 2021, in September, we opened our third store in Midtown East.
Right.
Where the rent, is a little higher.
A step up, so 1,500,
4,000. Over there now it's around 14,000.
14. Yeah,
something like that.
So you're basically consistently almost 2 to 3xing the rent.
Exactly.
With every new location.
Yeah. But again, it was a lot about understanding what we could do, understanding how much, proving the concept in different environments, and we felt confident that with the sort of the renewed offering, which as we reopened in September, was basically 3 salads, 3 bowls, 3 specials, which were also bowls and salads, and 3 smoothies.
Right.
And that's it. So
simple,
very simple, very focused on what people really wanted and what we saw from our numbers. And that actually was the right call, because when we opened, the numbers started really going up by a lot. And so that gave us the confidence then to invest in the following year in 2022 and take on a bigger space in Nomad, which is our flagship store, where we pay more than $20,000 a month in rent. And obviously, this is all due to the fact that we saw that the AUVs were going up, and we could afford to take on those spaces. And the locations were all profitable, so we kept reinvesting everything that we made.
Right.
And so
one thing I actually want to take a step back on, I think that's a really good explanation of sort of the trajectory of the business over time. I feel like, when you guys started in the mid 2010s, there was it was a very different business. We were talking about the change and the way you navigated the pandemic. What was the fast casual business in your local markets like at that time? The way I think about it is primarily weekday lunch, and everybody's fighting for a weekday lunch. Is that the right way to think about, call it 2017 to 2020 pre-pandemic?
I think it was definitely, again, back in those years, we only had location in Sunset Park and in West Chelsea.
Right.
So I can only speak, from my experience in that.
Yeah.
And Sunset Park was special because the weekends actually for us were extremely busy.
Yeah.
At the beginning, there was not that much happening in the buildings around there, so we were the main attraction, and people would come just to try this new concept. Like in 2017, it was especially for us. We had this video from Business Insider that went super viral. We had 70 million views. It was the 7th most viewed videos on Business Insider that year.
Wow.
So just a lot of people, a lot of hype, coming in. But people that landed in JFK and came straight to us. I was like, there's no need for this, you can come tomorrow.
But I guess that feeds into what you were talking about, where it's like the concept initially, as it was designed, was almost optimizing for this one time or once every 6 months use case. So you almost need sort of this loop of viral growth on a repeated basis just to keep the sales momentum going. At least that's the way I think about it.
Absolutely.
And at least with the first store. Right?
No, absolutely. And I feel like, to your point about, 2017 being the year of the booms of the fast casual and so on, that was the case, because our format resonated with a lot of people, and because it was a novelty in terms of what content was in that format. That's why people wanted to come and try it, And then I think post-pandemic, when really the fast casual sort of matured a little bit in terms of understanding this is serious, it's very competitive.
You have to
really be very careful in providing value and with the right in-store experience and online experience and so on.
My hypothesis actually is that I think I was having lunch with the founder of another fast casual concept that is thinking about moving into New York. This was a few weeks ago, and he asked me, and he's like, "What are the popular fast casual brands in New York right now? What are the emerging concepts?" And I stopped and I had to think, because I don't feel like there are that many, honestly, new concepts. It feels like the concepts that are thriving still in this environment are the ones that either, like you, sort of pivot's the wrong word, but maybe rethought the value prop, rethought the brand, and evolved during the pandemic, or they're the ones that already had super strong value propositions pre-pandemic, and then that value prop or that brand still resonates on the other side. I don't feel like we see too many new kind of emerging competitors. So.
I agree with you. I think this is due to many factors. One is that real estate right now is very expensive. It's really hard. For me, I feel like we're in the worst market for real estate compared to where we were before here in New York. I feel that's the case. but
and
also
that's just rents in general.
rents,
Yeah.
rents in general,
Yeah.
and concessions as well. Like I
Right.
think it's really tough. And again, this is my personal experience. So
Sure.
we're very picky because we self-funded for the most part, and
Right.
so we know we can't take too much of a risk,
Right.
in rent. While
Right.
I know others that just are more bullish and take on more. But that's
a good diplomatic way to phrase it. They're more bullish.
No, I mean, they take more risk, and then maybe
Yeah.
sometimes it plays out.
Yeah.
Obviously.
Yeah.
But I agree. Like it's and also it's way more competitive.
Right.
Like because the bigger brands then saw a massive growth. Like in our space, for example, like obviously Sweet Green has always been a big player in New York.
Yeah.
Just Salad has been a big player, and Chop, but in the last few years they really took off.
Ramped up
a lot the growth. So.
Yeah. You mean from a new store count standpoint, or from an AUV standpoint, or both?
Probably both.
Probably both.
Probably both. I think.
But definitely from a store count standpoint.
From a store count standpoint, for sure.
Yeah. But again, it's like existing brands sort of doubling down and
Yeah.
moving in, because you probably have a lot of spaces where maybe there were smaller, more experimental fast casual concepts that did survive the pandemic.
Yeah.
And now the store footprint is open, and so they're kind of moving in, and maybe it's more like a Starbucks strategy than anything, where it's like
just covering as much as possible. Yeah, for sure.
Yeah. And so you're as you're growing the business and as you're thinking about evolving the concept, there's a bunch of things happening there. You touched on menu, you touched on real estate, you touched on the labor model as well. Like, maybe walk us through the evolution. You talked about it a little bit from a menu standpoint, but the change from Avocaderia to Avo.
Yeah.
What does that look like from a culinary standpoint?
Yeah, I mean, on the current standpoint, it was about abandoning a little bit that specific type to avocado,
Right.
meaning we're no longer an avocado bar, we're a salad bar,
right?
Ultimately, and that's because again we saw the numbers, and Bikky lately has been helping us a lot in validating a lot of the assumptions, like checking the product mix, checking what people actually order, and then come back after they order that, so that what are the items that generate the best retention, for us,
right?
And ultimately, all these things were always bowls and salads.
Right.
And in particular, now the bowl segment. So the grain, like quinoa and rice and so on, way more than salads themselves.
Right.
And so that was sort
Why
of
do you think that is, actually? I'm curious if you have a.
I think people prefer warm food overall in general.
It's like warm, heartier food, essentially.
Yes. So I think here,
and that's true at lunch still.
Also
not just at dinner.
Also lunch. I think. From all the surveys that we made and the researches that we made, also as we were going through the rebrand, everyone sort of like put quantity as a really high element, but quantity can be interpreted also as like feeling full,
right?
Satisfied.
Totally.
And for me, that's always been a key part of our value proposition. Like when I had the idea for Avocaderia at first was like, often I need a salad, and then I end up needing a snack afterwards, and like. But then on the other hand, I like to say I go to Chipotle and then eat a nap afterwards. So with Avo, we wanted to be that in between, somewhere where you could, feeling satisfied, but at the same time fuel for the rest of the day without like getting the afternoon sort of nap time needed.
Yeah.
And so we evolved the menu to sort of meet that part. One big thing that we did last year was we changed the scoop of the protein.
Yep.
So we increased the portion from 3 ounces to 4 ounces, which it's detailed, but it makes a difference, inside the bowl.
And for the same price too, because I was just ordering from your website, and because we talked about this, I think yesterday, and then I went to order from the website today for lunch, and literally it's like regular scoop, large scoop, and there's no price differential.
There's no price
which differential. I think is consciously in the mind of the consumer as we think in the context of driving incremental traffic, is in itself a value oriented play or UX tweak, for lack of a better term.
Yeah, we decided to play a little bit with it because we were like, okay, we're going to introduce this bigger scoop. We wanted to do it, and initially we were like debating between, should we just offer like a double scoop for like just $1 charge instead of like a full price or so on. Right. We said there's no need for that. Let's just increase a little bit the portion for everyone, but let's see if that's actually what people want.
Right.
And so in the online ordering, you still see the choice between regular scoop and larger scoop.
Yeah.
Don't tell anybody, but it's the same scoop.
Yeah.
But this is useful for us to understand the behavior, and we validated the fact that the majority of the people actually picked the large scoop.
Yeah.
So we're going in the right direction.
Right. So I see. So you increased the size of the scoop.
We did.
But you even on your online ordering site, the UX is regular scoop, large scoop. No matter which one you pick, you're still getting the same larger scoop of protein, essentially.
And then eventually we will remove like the choice,
Right.
Now for us, it was more the test of seeing like, are people actually going for the large one?
Right.
So is it worth?
And you said
worth
60%
it for us?
of them people.
Yeah,
Are,
60 to 70. Yeah.
right. Right. Interesting.
Yeah.
Interesting.
But we're also at the time in which people really care about proteins. Like I feel a lot of us casuals have played with, adding new proteins. Like obviously, Green and Cava make a big deal about adding steak and so on. Like, because I feel, again, on one side, people crave more warmer food. Protein is the number one, point of interest or element that people perceive as premium. So from my understanding, like Green has been able to grow a lot the dinner segment through the steak because people say, okay, I can get a pretty good quality steak, and then it's debatable if you like it or not, from Green. But for that price point, instead of going to another place. So we've been playing with that a lot as well. We added roasted salmon, we added beef, and we have two types of chicken. One is the chicken al pastor, which has been killing it. So
we ordered one today.
So adding this type of varieties on the protein is really what could help differentiate, in a way the brand, but also get people to come back more often and try different things.
Is there a test also between a complete dish that already has the protein selected versus a maybe just a base where someone can add their protein? Is there a difference there that you think about, maybe between upselling or added level of customization that you feel like does drive higher stickiness on those menu items, or at least with the concept overall?
I mean, what we think we understood is that people can, when they come and try us for the first time, they first order something from the menu. For the most part, like maybe they get something that sounds familiar to them,
like a set dish,
like a set dish, which could be like our very popular one for the first timers is a spicy chicken bowl. And I think it's because also the name calls for something very intuitive. It's spicy chicken. But then what happened is that they then see the whole variety of ingredients that we have, so they start customizing it until they find what we like to call the bowl mate.
The bowl mate.
So it's like so they find really what resonates most with them and what they tend to come back. And then I think that there are two types of consumers, like the ones that get the same thing over and over, and the ones that are more curious and try different things every time. So it depends a little bit on that. But now by far our top seller is the create your own salad and bowl. So we keep, as we keep evolving the menu and so on, we keep adding new ingredients so that people can play more and add more things that they like.
And so it sounds like it's a very intentional approach to menu innovation, and I would say merchandising, for lack of a better term, and menu optimization, all in a way to drive, and I'm paraphrasing here, but all of these moves are designed to figure out how you're driving incremental traffic, incremental frequency, incremental retention, which ultimately translate to higher AUVs. Is that sort of like a fair way to?
Yeah, absolutely. I think we are the underdogs of both in New York, like being so small compared to some of the big players we mentioned before. So we have to be creative in terms of what the value proposition is compared to others. And I think for us, it's being so small allows us to play a lot and to be able to navigate and change quickly. So we do change the menu like every 3 months, like some of the others do, but then some of the times we just do it more frequently, for example. Or maybe we just add a special ingredient out there just for itself, like we did for halloumi, for example. Halloumi cheese. And so and then we do some type of communications around it and so on, or some marketing efforts around that. Like this year we changed a lot, like the past 2 years as we went through the rebranding. Obviously, we evolved the menu. We changed the bowl look and size, so we also got bigger bowls. So one of the stickers that you find is like the biggest bowl in the Big Apple. So that's like what we send out. We switched the cooking with, we only use avocado oil.
So it's more premium than.
More premium, exactly. It's healthier and so on. All our dressings are vegan. So that allows anybody for their dietary restriction to choose any flavor profile that they want. And we did all this, increasing the portion and so on, without increasing the prices.
Wow.
So that was a big effort, and obviously we see that in the P&L like a little bit. But
in terms of margin, like counting against you,
of course.
Because costs went up.
The costs went up, but at the same time the volumes went up.
Right.
So ultimately it balances out my fixed cost, and so I feel like since we are in a growth phase, we decided to give up a little bit, more value to the consumers, while keeping a little less margin for us at this point.
Yeah. How are you communicating that different? So we talked about.
Camera is moving.
Oh, that's okay. It follows us, I guess. When we move it, the camera moves. So
Okay.
when you talked a little bit about like biggest bull in the Big Apple, that's one kind of note of differentiation in the worst real estate market.
Yeah.
Hyper competitive environment, as you said. That's sort of one thing. The next thing that you talked about was premium avocado oil. How are you hitting these notes of differentiation consistently so that you know that the investments that you're making are actually translating into higher AUVs? Maybe like what's the gap between making this decision for differentiation in this competitive environment and then seeing the flow through into the P&L?
Yeah. I mean, it's a great question, and I wish we could go even more granular with the data, and be able to analyze those. I feel like for us, very often it starts with some assumptions that we make by seeing patterns, from clients, and then we do a lot of surveys.
Yeah.
And when we did the whole evolution from after the pandemic, we did a lot of surveys to our guests and to our team members as well, because we wanted to make sure that we would change in a way that our team was able to execute in a very consistent way, because we don't require we don't have any specialized chef,
right?
But then following what the guests actually want. And so very often we start with some assumption based on patterns that we see on the numbers, or just things that we read about, researches and so on.
Oh,
and then we double test it with the surveys to our guests. And we have obviously different segments that we usually use Bikky to create the segmentations. And it's all true. I'm not saying this just because I'm here. It feels weird. Actually, it's true. To create the segment based on behaviors. And so whenever we want something from like the top guest, we just go and ask them, what you value the most, why, this and that. And then whenever we want to get something from people that don't come back that often, maybe we give a bigger incentive to respond to the survey, and we get all their insights.
And you get their feedback.
And so then based on those insights, then we try to work of something that could be then executable on the store, and then again we go back and tracking if that actually works or not. One thing, for example, that we tested that then revealed not to be successful is that we knew that breakfast and weekend sort of times were slow for us. And so we wanted to launch a new category that we did, which is the breakfast buns, or brunch buns. So it's just the sandwiches, with the fried egg, and avocado and so on, which are very good, and we tested them, and we tried them for a bit and see how it went, and now we realize that people actually don't really care about those. And so we left them on the menu for a few months, and now we're gonna remove them.
And so that when were you offering that? That's like consistent every single day of the week, all hours available.
Exactly.
All hours,
but the goal was like, okay, how do we grow weekend sales?
Weekend breakfast, or just weekend in general?
It was more weekend in general, because a lot of the time from the surveys and the insights, people associate avo with brunch as well, even though we are again more focused on bowls and salad, but because the avocado is such a brunchy thing. So we said, okay, maybe we can create a little category that plays more into that. But then it was not really. And I think ultimately what happens is that people get confused when you offer too many stuff.
things.
And so like, okay, are you a salad place, or bowl place, or a sandwich place, or like a brunch place? So it's like, no, we're a bowl place, so we know what we are. So we're going to remove that category. And so.
It's interesting. If I'm sort of like paraphrasing the things that you're sharing here, it sounds like really what has worked for you is really honing in on sort of the core value prop of Avo, which more or less has always been the same. Right. To your point, it's more or less always been the same, but you've evolved the menu to better articulate that value prop to the guest. You've opened new stores in new neighborhoods so that you are reaching bigger stores, bigger store formats, but you want to reach more people. And then consistently honing the execution of that with a simple, straightforward menu that doesn't require a lot of operational lift and training. Drives that consistency with the guest. And then you're layering in sort of your own surveying of the guest on top of that to make sure you're staying with that core value prop. And that's sort of like, I think, like the 4 pillars of what I'm hearing as what's helped you drive consistent success. And now you're also in this mode of, we've got the foundation, AUVs are going up. I'm assuming, but AUVs are going up at all our stores. So we're building a good foundation year on year. We're seeing improvement in our core stores. Now we can experiment a little bit. And now we can see how we can extend either into new day parts or with new guests or a new menu category. Is that sort of, you know, if I bubbled it up, just sort of
no, this is great. Great summary.
Good.
I think you said it better than I would have said it.
But we can play this video next time you're fundraising. We'll just do this. We'll just show this video.
Yeah, I mean, no, it's perfect. I think you know, we've always been sort of very we like to play and experiment, you know, with things and that. But I think, you know, operationally, we always keep in mind that, you know, some things are simple, some things are not that simple. We're a scratch kitchen, so like, you know, everything is made fresh every single day. We don't have a commissary, so every store makes their own thing and makes their own dressing and so on. So, you know, it's we try to streamline it, but it still has, you know,
of course,
so we have to be careful with that.
There's a little bit of complexity.
But yeah, in terms of, you know, like growth and approach, I think what we realize is also that the more stores we open, the more the AUVs grow for the system.
Oh, interesting. Can you talk through that a little bit more? Is that just because, is that like you're at the point now where like building the brand?
We need awareness,
actually works.
Right. We need to build brand awareness. That's why. So this year is the first year after, you know, since 2021 is that we didn't open a new store. Because we decided to invest the money that we had into marketing and growth and so on. And we'll do that next year. We'll open a new store, 1 or 2 next years. But we
what's the AUV you feel like to be successful in New York right now?
I think minimum, like you need to get to like a 1.8 to $2 million in AUV. And so, you know, our first store, which is like the one in Sunset Park, makes like 700,000. So, you know, like, but that's a different model. Like it's made for that. The rent, you know, reflect the location and so on and so forth. The new stores that we open go more towards the sort of the new approach and aiming for that. I mean, we are at that AUV, you know, that we got. So we went, you know, threefold on where we started, which is really where we wanted to be. And obviously, I think, you know, there are players that are able to achieve a lot more, like in the city because of density. And I think that we can do a lot more as well. And that's why I think it's going to be key for us to keep growing the brand awareness, because that helps, I think, on the system level to create more familiarity with the brand and make it become sort of a staple in the routine. Like at the end of the day, you know, we have about 30% of our guests are habitual guests. So people that come.
Where'd you get that stat?
You know where I got it from. But it's, you know, that's very important. It's really that's our number one thing.
Which is what, probably 2.5x the average for what we normally see in fast casual, if I'm remembering off the top of my head.
It's pretty good. So that's like we know that if we're able to get people to order from us like 5 times, then sort of are, you know, are stuck with us. You know, they sort of will become part of the rotation. Because breaking the routine here in New York is the hardest thing. Because people already know that, like, on Monday they go to Sweet Green for the Harvest Ball. On Tuesday it's Cava. Wednesday is Dig. You know, whatever. Or Naya, which is the best, by the way. And so for us to grab that attention and being able to become the Tuesday choice, you know, the Wednesday choice, has been a big investment, a big lift off, big effort. We're very aggressive on marketing. You know, we have a $7 off offer when you first download the app or you first order. And then we send $3 off for 3 orders. Subsequently. So
you're giving $16 off basically over the first 3 to 4 weeks.
4 orders.
And you still, so even
plus
though
they get loyalty points. As they do this. So then once they have loyalty points, we have one very aggressive loyalty offer, which is 50% off a bowl and salad. With just very few points. Just to keep getting into that habit.
Got it. So I mean, all in, let's do the numbers a little bit. So all in, what kind of return are you expecting then? Because you're investing $20 basically in the first month that someone is a guest with you. And I guess what kind of retention, stickiness, or habituality do you feel like they need to ramp up to, like from a lifetime value standpoint?
I mean, what we see is that there's a lot of churn after order 1. I think it's
that's universal.
You know, it's universal. And so for us, it's all about, okay, are we able to get them to order 5 or 6? Because once they get to order 5 or 6 or 7, then the numbers go really, really high. So the lifetime value then becomes, you know, exponentially higher than what it is on average. You know, so maybe on average, just say for us is like $40-something, like something like this. If we look only at the super users, the habitual guest, then it goes in the hundreds of dollars, like, you know, $200-300. So that's where really the value is. So that's why we put so much effort into that. And to be fair, that happens also on the platform. Like also on GrabHub, we have the same thing.
Yeah.
Like at this point, we made the switch, from trying to fight the third parties to actually embracing fully,
right,
and investing a lot of money on
which
those.
I think is actually,
yeah, we started doing it last year, and it's been paying off.
Yeah,
for sure.
Yeah, the way I always think about it is like, because again, like, my mother-in-law is a restaurant operator here in New York, and it was everybody in New York in 2016, 17, probably through 2020 is very anti-third party. And I would have conversations with folks who are in the Southeast, and they're like, the third party saved my business.
Yeah.
And it's like, all right, I need to change my mentality because there's something here. And now it seems like, the best operators that I know, yourself included, have shifted the mindset to, even though the margin is lower and the profit dollars are lower with this channel, if we might as well raise the ceiling, right? Just raise the overall dollars of operating profit associated with this channel.
Yeah.
Even if it is at a lower margin, and we'll adjust whether it's pricing or merchandising or modifiers to streamline it as much.
I think the main thing is, first of all, you can't beat them. Like at our size,
right?
There's no way.
Right.
Like
even
so
most
just
people's size, yeah,
exactly.
for sure.
So just embrace it. Like so at that point, like know that you have a direct conversion opportunity there.
Right.
Because right now when we do digital marketing, we invest on awareness. Because you can't drive conversion right away.
Right.
It's really hard.
It's
like
hard.
it's not that you're there. Think about yourself. Like, you're there browsing, like scrolling on Instagram. You see an Avo ad. You're not gonna buy right away.
Right.
Like you're gonna think about it, and then if all goes well, you're gonna leave me an email because the offer is so good that you're gonna leave me an email. But otherwise, I'm just gonna enter into your headspace,
subconscious,
subconscious, and then on the other side, so that's what we invest dollars on. Like invest on awareness, and then we have.
And you got to hit them 5-6 times maybe before they actually
even
convert.
more. And then we have lead generation campaigns, so we get the emails, and then we target them through MailChimp. We have a flow, and so on. But again, the majority of the time, whenever we try to do conversion campaigns, it was terrible. Like the cost of acquisition was so high that it would never make sense.
Yeah.
On the other hand, on the platforms, that there's already a really strong intent. And people are already going to buy.
Right.
So you might as well try to push it even more, and give them a good offer, sponsor the listing, and so on, because that's going to drive an immediate conversion. So all in all, I think it's a better dollar spent potentially in that sense.
Right. From a return on ad spend standpoint. Yeah. Yeah, that makes sense. Okay. Now shifting gears a little bit, when we think about sort of where the business is at today. And so I think you've done a really good job of articulating how you've been consistently driving traffic and nailing the consumer value prop, whether it's things through like culinary innovation, the size of the bowl, and then sort of adding marketing fuel on top of it to accelerate it in the consciousness of the consumer. When you think about, let's talk about maybe from a more macro standpoint, like we were at a conference, I think 2 weeks ago, and we were talking with the CEO of another fast casual operator, and they're like, and you were both saying Midtown is back. And I think this would be helpful for folks who are either in New York or thinking about entering New York. Why is Midtown back? Number one, and how would you describe it? And then number two, the way it's back, is it the same value prop for that guest today as it was pre-pandemic, where it's captive lunchtime traffic, or is it something else? Has the consumer actually changed?
No, I think so. Thankfully, offices are back. So what we saw post-pandemic was that, it was it was a Tuesday to Thursday type of business.
Right. Post-pandemic.
Yeah. So it was crazy because Tuesday, Wednesday, and Thursday we were slammed with orders, and then Mondays were sort of okay, and Friday were completely non-existent.
Yeah.
And then the following year, Mondays were back. Right. And now it's similar to the other days. Right. And now Fridays for us are also growing again.
Interesting.
So I think the thing is, Midtown is very much populated with financial services, firms, law firms. So all these people that they need to go back to the office. Right. And so that's been driven a lot of their back to work, and obviously again the lunch rush. Yeah. The additional thing is that all these companies, they have been offering a lot more incentives to their employees
to come back to the office. Okay.
Exactly. So I think everybody talks about catering now. Like catering has been booming for everyone. Like we saw our catering sales triple, over 2 years. Wow. So it's been very good, and but it's not just catering, but also just group orders, and corporate clients. We have our own outpost system. We call it Avo Tree. So we install a shelf inside.
I didn't know
inside the office, and then we box deliveries to the office. And it's been very successful for us. So We just started, so we have one
Okay.
client and one is signing up. But so far, it's been
Yeah,
amazing.
sorry.
Uh,
One client is loving it.
honestly,
so far. Yeah.
that is the lifetime value of that client as a
Right.
business. It's huge,
Right.
huge,
Right.
huge. And we stole it from Sweetgreen, by the way.
Okay. Nice.
And
Nice.
yes,
There you go.
and,
Okay.
but no, what I'm trying to say is that there is a lot more incentives sort of coming to the people to come back to work.
Right.
And obviously, like you have to be, you have to become the choice for the employees to spend their incentives and so I think Midtown is definitely full on back.
Yeah. But it's back to being a lunch primarily business.
It's
which I think is
primarily business for sure. Yeah.
Which is interesting.
Yeah. But also I think like even in the past, like if people were living not too far from their offices,
right,
you will still get deliveries from them because people in New York have small kitchens.
Yeah.
They generally are busy working. They don't cook for themselves. So it was just a shift, like, and so ultimately what happened is that they ended up paying more to get the order delivered instead of getting it, but it was subsidized by the company, so it didn't matter. So.
Right. Got it. That's interesting. And then if you think about like future stores and growth, like I guess what are you looking for in future locations?
Yeah, so we are looking actually. We're negotiating a couple of spaces. It's tough. We have one that we've been negotiating for a bit now. Also in Midtown, like not too far. I think we're confident about wanting to stay in the Midtown area because we know that our target demographic is there.
Right.
We're looking downtown as well because we don't have any coverage there. But I was very scared about financial district for a while, and I feel now,
it's the same. I mean, it's the same. Honestly, it's the same thing that you're describing in Midtown, where it's probably more financial services presence, more law presence, and and there are other fast casuals down there who said, I think to you and me both individually, that it seems like those heavy services or heavy trade services focused kind of type of businesses are coming back.
And that's what we look for, because we want to be close to the competition. So this is also something. This was also learning. Like when we first started, we thought, okay, let's go where there's nothing else, so that we can be the destination of choice for this type of food. And the reality is that you have to think about convenience.
Right.
And for people, convenience means going to a district and finding a lot of food options.
Right.
And so, which doesn't mean there has to be a food hall, but like be a strip of or like a couple of blocks where you find all these places. So, for example, our location on 56th and 6th is next to a Chopped.
Right.
So like direct competition, but I don't think that they felt that much the fact that we opened there, because again, it's about the rotation, and people don't eat the same thing every day. So it's we're between there's Chipotle, Chopped, us, and then Taim.
Right.
So we're all there, and people like that, so like to go in the street. And then one block down there's Naya and Dig and all the others.
Yeah.
So I think
what's interesting too is within all of those concepts, there is enough differentiation from, again, all the things you've been talking about from a food standpoint, potentially from a day part standpoint as well. There's enough culinary differentiation where it's like you're just trying to get a shot in the rotation, right? Because it's not about, I don't need you every single day, but if I can get you once a week or once a month and make you sort of in that 30% habitual bucket, and I'm willing to invest aggressively to not just acquire you but keep you and build a habit and break through, then there's an opportunity. Those are the things, sort of the inputs that lead to the increase in traffic and the increase in AUVs that we've been talking about over time.
You have to play really well your first chance so that you have. Which then makes me think about, so one of the biggest issues that there is in the fast casual like ours, and I've talked about it with other people in the same space, is like consistency. And making sure that the orders are executed well.
Right.
Because we deal with so many different ingredients, and because our top seller is a create your own. Right. That it's often the case that not that often, but sometimes it happens that we forget an ingredient and so on. It seems like it happens often because I care a lot about the complaints.
Right, of course, you notice it more.
In the bigger numbers, it's not that much, but and I think with that, hopefully, there's a whole movement on automation, obviously, like if you're with different kitchen and so on, that might help a little bit with that. But I think if you're able to do a really good first order, make it exactly what the guests wanted, then you're gonna be able to get maybe a second chance if you incentivize it a little bit with a good discount, and then keep going back.
Yeah, that's great. And then last one for me before we take questions from folks, but the obligatory, if you think about, you and I have known each other for like what, since 2020, I believe, right? Like February 2020 is when we first started talking, and of course, I followed your journey before that, just paying attention to fast casual brands.
Yeah.
But we've had the good fortune of working with you for 4 years now,
Yeah,
almost.
definitely.
And if you think about sort of how you use our platform, how it fits into your operations, how you run your business, could you just share with the folks tuning in on
Yeah,
sort of, where we fit in, how we help, where you feel like
for
we've had
sure.
the biggest impact? Yeah.
Yeah. I think we mentioned a few over the chat, but I think a big thing for us is definitely on the menu side, menu analysis, menu intelligence,
Yeah.
understanding what drives their retention.
Yeah.
So
Yeah.
because we care so much about their first visit, Bikky has been able to help us understand what items drive, that second visit.
Yeah.
Obviously, all the automation around, the emails that based on the segmentation. So we work a lot with segments and try to get people really a more tailored, communication as possible.
Yeah.
We use it to understand what the habitual guest rate is, obviously, because that's what really moves the needle for us in terms of. So yeah, there's been a lot of elements in terms of intelligence and analytics that we've been using. So thank you for
Of course.
keep that on the platform, which is very different from 2020 when we first started working together. It's actually amazing how you've developed it.
Well, that as I'm sure you can attest to, all comes down to the team and the people surrounding yourself. It's one thing to be an entrepreneur with an idea. It's another thing to have people who are willing enough to believe in you and invest part of their careers in helping you achieve the vision.
Absolutely.
So, for sure. Excellent. Well, cool. Look, I'm just, I apologize for looking at my phone here. Just seeing any questions, but no, it looks like we don't have any questions from the audience. But great. Maybe we'll end on one final note. What do you feel like is next for Avo?
Yeah, so we are, we're looking to open a few more stores. As I mentioned, we've been mostly self-funded. We raised that 600,000 in 2019. So we've been thinking if it makes sense to go out and raise money and try to accelerate growth, or if we want to keep growing organically. And now we're sort of open to evaluate possibilities in one regard or the other. I feel that we've built a pretty solid foundation for what the concept is and what resonates, with people and so on. So I think we're sort of looking to understand what next steps will look like in that sense. But for sure, we're gonna keep growing. We're gonna keep maintaining those key pillars, that you mentioned about, very thorough customer focus and team focus as well, because ultimately, I think to your point before, like one of the main things that actually helped us grow to the 5 location and grow the AUV is that we've increased a lot our team retention. And
it's a good point. We barely talked about it. So like the labor aspect.
And our GMs, they all grew from within.
Right.
So that complete game changer, which obviously we could learn only as we kept growing and progressing.
Right.
But that really helps maintain the culture and grow the culture, and actually serve as creating new examples for the future leaders that are coming in. So saying things that a lot of people sort of know. Obviously, it's not always easy to do it, but it's really a game changer.
Yeah, excellent. Okay, do one last check here for any questions. Looks not. Okay, amazing.
Easy.
Yeah,
right.
Ale, thanks for being here. Sorry you had to come in and do it with a bum elbow, but appreciate you being here and joining us. For everybody tuning in, thanks so much for being here. Appreciate you spending time. If you're watching the recording, thanks for spending time watching the recording. Hope you got something valuable out of it. Yeah, thanks again.
Thank you.
Take care, everybody. Be well.
Bye-bye.
Bye-bye.